session today, the session is about investments in HR technology and investors' view. I have three of the topmost minds in this business helping companies invest. Investors put money into HR tech companies. Devdutt Navarre from KeyBank, Mike Parker from AGC Partners, and Brian Cole. Welcome, gentlemen, to our panel discussion today. I hope we'll keep this exciting, and you all will be able to share with all of our attendees what the investors are doing and what we are going to see in the coming days. So Dave, let me start with you. The global pandemic has made an unprecedented, abundantly clear impact on HR software. We all know working from home, HR software has become even more and more important, especially in governing the global and the remote workforce. What are the promising HR verticals in your mind that investors are keeping their eye on?
No, that's a great question, Vivek. So first of all, before I launch into my answer, thanks to everybody, Vivek, Stephanie, everybody at Neeyamo for making this happen, and appreciate you guys inviting us for this panel. So if you roll back the tape a little bit, right, going back to 10, 15 years, HR used to be more of a tactical function. It became, when Oracle, SAP were more around HR payroll versus the broader human capital management. In the last, I would say, several years, it moved into becoming more of a strategic function. And then frankly, in the last 2 or 3 years, it's become more of a mission critical function. As you mentioned, what the pandemic has done has really accelerated that movement towards the mission criticality of the human capital function.
Right.
And really across the board, Vivek, we are seeing HR solutions in demand. And so as you kind of start double clicking on that, there are a few subsectors, a few verticals where we are seeing a lot of investment dollars being put to work. The first one that comes to mind is engagement, communication, collaboration, right? Not a surprise. Mm-hmm. But if you look at engagement, it could be construed in multiple ways. Every company is looking to make sure that because of the remote workforce, because of the distributed workforce, they want to make sure that the employees are engaged, motivated. That's on one side. But the second thing is, and more importantly, employers are looking to almost over communicate, whether it's communication on benefits, communication on COVID-19, communication on coming back to work. And so they're almost trying to bundle engagement and communication together. And then third, kind of the trifecta is the collaboration, right? Assuming all four of us are with the same firm, how do we work together? We used to be in the same office, not anymore. And so we are looking at those three kind of categories coming together, although there are companies who are doing all of it together, but some of them are partnering with each other. And so there are a lot of investment dollars being put to work on that front. And then the other subsector I would talk about is, which is almost kind of counterintuitive, is automation around recruiting, right? We have gone from a period of record employment back in February, March timeframe to a record unemployment in a span of 8 months. And so with that, you have a massive funnel of people, unfortunately, will be looking for jobs. They're looking for jobs as we speak. Going forward, they'll be looking for jobs. So from an employer's perspective, from a hiring manager's perspective, how do you make that job easy for that hiring manager? So to make sure that you're able to screen those candidates, right? Identify the right candidates in a faster fashion. How do we do that? It's through AI. It's through AI, machine learning. It's through automation. It's through digital interviewing. And so all of those products which are already there, but are getting revised, refined, and frankly, getting much more predictive, are going to come to the fore as we speak. And so those are the 3 or 4 areas I can think of as you look at kind of different kind of HR subsectors within the broader human capital, where kind of investment dollars will be continued to put to work.
Well, I think you raise a great point, Dave. Brian, what about in your mind? It's very interesting that Dave refers to the fact that we went through from a record employment to a record unemployment, but that's restricted to a certain set of sectors, right? And which is going to come back very quickly whenever we get rid of this issue, which is not in the short term. So what are you seeing, Brian?
So on the topic that you raised with Dev, certainly agree with everything he said. And good morning, everyone. Brian Cole with Baird. Thank you all for attending, and Vivek for you and your team, all the hard work hosting. Agree that connectivity has been shoved to the forefront. Agree that ability to communicate from work from home has been shoved to the forefront. I think one thing that's intriguing, though, is that all of your sort of set your watch by them administrative processes were not without disruption from COVID as well. There's
Right.
plenty of just get someone paid, just get someone benefited, just be able to hire and onboard type of activities that are more challenged in today's world. And so companies that were, let's say, unoutsourced or untech enabled historically and had a do-it-yourself mentality, we're certainly seeing heightened interest and awareness of the benefits of relying on a third-party expert for some of the more, let's call it stable back-end items as well. So I think it's equally impacted, and I like to split it up into sort of front-end recruitment, middle-end engagement and talent management, back-end administrative, payroll, benefit, et cetera. Intriguingly, this pandemic has impacted all three, which a normal, let's just call it economic recession, would have had a further disparate impact on the front end.
Right.
This particular case has impacted all three.
Right. Mike?
Yeah, I'm sure. Happy. Thank you all for having me here, and all of us. And this has been fantastic. Neeyamo is a great company, and it's on display in this virtual conference. So you're sort of leading the way in this area. So thank you, Vivek, for inviting me. I will take a step back and say, if I look at what COVID and the lockdowns and everything has done, is we've had an extremely strange phenomena where you saw a lot of companies in the HR tech space, and I would say that gets to the point of front end, back end, and middleware, or however we want to describe these things. I would say that it's important to understand that a lot of companies saw a precipitous decline in new business activity.
Right.
So whether you were going out to sign up a new customer and your pipeline either dried up or if everybody put it on pause, the only area, and it was a very narrow area that didn't see that decline in the broader HR tech sector, were companies that dealt with communications and collaborations in a work from home setting. So Zoom would be a perfect example, or Slack, or anything that had those type of features and qualities. So that was the one area that not only had resistance, but had accelerated growth. Outside of that, everyone was challenged. And then it became, because while they may be mission critical software solutions, at the end of the day, you have just fundamental challenges around doing business. Well, of course, then we saw, led by the public markets, a massive charge and drive, up higher as we reached the bottom and people got their equilibrium about them. Same thing happening in new business activity, people willing to engage and continue the discussions of business decisions that they were making. And then, so we saw a lot of companies, not all of them, but a number of companies start to pull out of that and gather momentum. And start to say, hey, I'm some approximation of the company that I was back in February, or I'm all the way there. And that's been interesting because it has been bifurcated for the most parts by sectors. Some are, I will say, many players in the engagement spaces and the softer skilled areas, they have been challenged. I'm sure a lot of practitioners would agree with this. They are coming back last in that group. Because if I need to make a transformation in my business after I've laid off a number of people, the first thing I'm going to do is be looking to. I'm also going to be looking to save on software costs and other areas, and thinking about engaging employees and rewards and those softer things are not front and center in what's mission critical. Some of the larger ticket purchases also, if I was looking to swap out my core HR solution, that may take a bit longer as well. but those are starting to, people are starting to engage, and those new business decisions are happening. And I would say then the last piece, it says, well, what's really going on in the various verticals, and how do you judge whether it's an area of high growth and continued interest in a world where everyone saw new business activity go down, is whether you're able to retain your customers in this environment. And so a lot of companies that have seen softness in that, again, I would say that engagement in those softer solutions have been out on the far end, and practitioners would know this. You've got to save money. That's the area you're going to cut first. You're not cutting into your payroll and your core HR solutions and your business services that you need. And so, that's a really indicative of how mission critical a solution is, and then how, and whether or not, as we reopen and as business momentum picks up and we come out of a recession, whether, that area is, central to that. Some areas like Deb highlighted, I think, like, recruitment and recruiting automation, that absolutely is sort of a next wave leg of the journey, right? We've got a great rehiring occurring now. And so you're seeing that great rehiring happen, and there's a need for all those automated tools out of the frontline workers, and then also in every area of the economy. So that would be an area that I would concur that's picking up. But fundamentally, this is the moment of the shakeout, Q4, Q1, Q2, and we'll see there'll be a lot of companies that are winners, a lot of solutions that gain traction and adoption in the new world, and then others that fall by the wayside. At least that's what I'm seeing.
Yeah, absolutely. No, I as you all were speaking, I was thinking through this, and I think from our observation, we've seen the enterprise customers continue to come back and look at their larger HR transformation. They're still on track. Whereas I think it's the middle tier and the smaller tier market that it has gone down some of the paths that they've spoken. We've seen launch of Rippling, right in the middle of this pandemic. Who would have thought, a company, and these are by, as we all know from the ex-people who made Zenefits, so they've come with Rippling, but surprisingly, they've taken Rippling, not the HR software route, but more the remote infrastructure route, right? Onboarding and IT asset management, writing at front and center rather than HR software. So that leads me to my next question, Brian. What kind of stark realities do you think the HR tech company should be prepared for? What are we going to see in 2021?
Sure. A fair question. One that, depending on your crystal ball, some people think we're largely out of the woods. I think others think there's another wave or two to come. And I don't mean virus wave, but sort of wave or two of economic disruption to come. I think all are possible, frankly. But you have to put on a bit of an internal and external hat here for your question, Vivek. I think internal, from a company perspective, if I'm a CEO or a CFO or a COO at an HR tech company and interacting with a CHRO and others at a potential user of my solution, there's going to be an expectation of continued investment, full stop, right? Mm-hmm. The pandemic's not an excuse to stop advancing product, to stop advancing value add for your client, because remember, they're spending dollars on you.
Right.
There's been a bit of a different reaction from, let's call it, low value add point solutions have been treated one way, easy to turn off and not get fired over, to a high value add point solution. That's actually been the best place to be, in my view, in that you're relatively small dollars, mm-hmm. but you have a high value add to the client. That's been quite durable in retention. And then you get to the more platform solutions that are frankly hard to unplug in what is relatively a short-term time, right? People aren't ripping out a full HRIS or ERP or the like, or even an ATS just because we're in a pandemic. Those are sticking as well. Maybe there's some pressure on costs. The pandemic has certainly caused, and your name is super appropriate with Rise Above. The pandemic has caused certain models to have to pivot to rise above the challenge of the pandemic, whereas other models that have been able to sort of just bear it out from a solution standpoint, and it's been just a liquidity challenge, right? Maybe some capital needs to be raised, maybe some folks need to be on holiday or reduced salaries, but that bit we are coming through, right? Now we're starting to get back into the rehire as Mike said, the reinvestment mode in the economy. What it's really shown out is that the more recurring businesses have come through this differently than the more transactional businesses. HR in and of itself, sort of half the models, to pick a number, have a transactional nature where there's flow, some sort of flow.
Mm-hmm.
The other piece being a more sticky model to census, if you will. You're either on a flat subscription per month relationship, or you're on a census-based number. And one of the positive realities of the pandemic is that census didn't change that much. If you look across the whole of the world, the employed set, it didn't change that much, particularly when you bring furloughed folks back. And so things that are sort of per employee per month, things that are flat subscription, things that are like payroll or benefits and running across a population have done extremely well. And so then you start pivoting to, well, how do investors feel about that? And investors love disruption, right? They also love stability. Those two are at odds with each other to an extent. If you can find both, then you've got a winner. So if I think thematically about what investors are looking for, certain trends rage on despite the pandemic. Globalization will continue to rage on, full stop. Technology disruption and enablement in HR, which was one of the last segments to be disrupted by technology, will continue to rage on. Outsourcing, they double down on it, right? If you're a CHRO or even just a sort of a head of payroll or benefits, you realize that if something was already partnered with an expert and then you went through a pandemic, you're a lot better off than your colleague down the road that was trying to do it, sort of on their own without expert help. Contingency for the very same reason. Every year you look at the stats, contingent employment versus full, direct W-2 employment has risen. See that continuing to go. Much easier to have flexed a vended or a 1099 workforce in this environment than a W-2 workforce, particularly when you get into the more socialized countries. And then if you pull that all back to the investor set, so what am I looking for? I'm looking for some ongoing disruption where I can create differentiation. I'm absolutely more focused on growth than any other metric. I think that was true pre-pandemic. I think it'll be double true post-pandemic. It's become more difficult to find durable growth, and those people will continue to rise to the top of the pool in funding. Next, the sort of where am I hunting in the market? The bounce back, if you will, from the Great Recession, the bounce back from the smaller recession prior to that, disparately affected mid-market versus enterprise, right? There's a different bounce back and growth curve there. Right. We're also at a different place on the technology adoption curve at enterprise versus SMB. So I think an interesting focus there for investors as well.
Yeah, I think, Brian, you raised a very interesting point. I think the pandemic is leading to a whole different ballgame of models, right? Enterprises are starting to look at, for example, earlier no enterprise used to think about remote workforces. Today, remote workforce is the de rigueur, right? So if a workforce is remote, then you can hire talent anywhere. And that leads to how do you get the right talent now, right? Also, you have the Silicon Valley companies now offering to their people, hey, will you move out so that I can reduce your salaries in the long term and keep your salaries in the. So I think it's also, you raise a great point. Mike, Dave, any comments around this whole balance between regular workforce and contingent workforce? I think that's the big change that we're going to see post-pandemic. The whole gig economy, though, and I think the Proposition 19 or 20 in California is going to anyway help on that. But that's the big change, I think.
No, I agree with you, Vivek, and Brian, well said earlier. And I think you mentioned earlier about the decisions that are being done by the CHRO are almost getting elevated to the CEO level to a certain extent. So as we are seeing going into next year, Vivek, diversity, equity, and inclusion is a big part, right? And right. So as you're looking at tapping into talent across the board, across different geographies, it doesn't matter at this point. And so DE&I is extremely important, and it's not just in the CHRO's mindset, it's at the CEO and the board mindset at this point. And so there are a lot of, again, going back to the recruiting, automation we were talking about, people are trying to embed D&I in those product suites, right? Trying to make sure that we are having the right policies in place. And then another thing I want to double click on what Brian was mentioning was investment in technology. Technology disruption isn't going to stop. And what that means is because the distributed workforce, everybody's going to have mobility capabilities, right? It's no longer a desirable function. It's a necessity to have mobile products, right? Whether I'm able to do this on my phone, well, I have to do it on the phone right now or my iPad. So whether it's HR, payroll, any product you can talk about, it has to have the right UI UX experience, right mobility experience. And what that means is it has to be a very strong back office automation function. And so I think people will be more and more focused on how do I make sure that it's less of an admin friendly tool and more of an employee friendly tool, right? People like you and I can tap into your phones and just and look at on demand pay. For gig workers, that's a big thing, right? So there are a bunch of kind of sub products that can be enabled if you're on your mobile. And because I won't be going into the office or I won't be going into the bank for a while, all of these become that much more prevalent.
Yeah, you're right. So Mike, as Dave mentioned, Brian mentioned, we're seeing a bunch of new models, new companies coming into play, right? I see a lot of conversation around on-demand pay. I think it's become more prevalent here in the US, not yet. Not too many of the people globally talk about on-demand pay, but I think that's also unique to how our market is there, and we're a large market. But there are even more companies that I see every day one new startup coming up. And you guys are guiding investors, right? You're leading the investors to these companies. And in your mind, gentlemen, Mike, why don't you start first and then we can go round robin. What are some of the key things that investors should look at as they judge which companies should they put their money on? Because at the end of the day, they need to get returns, right?
Right. And I guess I'll step back and say first, there's company-specific features and things, and it all depends on the stage of the investor. There's an infinite amount of complexity here in that question to say, okay, well, if I'm a seed investor, I'm looking for just more disruptive technologies and moonshots. And then as I move out to a more mature company, I'm very focused on the profitability of its growth and how it's growing and how profitable it is in that regard. And it's the disruptive nature of its technology will be born out in an understanding of how its P&L looks, quite frankly, and how healthy its business is, and the retention of its customers and how happy they are and upselling them and those things. So there's a lot of financial metrics that become involved in, and after the session, happy to review that with anyone that makes sense.
Yeah.
But a lot of financial metrics that come involved at the larger stage companies. But if we're talking thematically on a technology standpoint and at the earlier stage, and the things that are going to be disruptive and new companies, the ones that are most interesting to me are those that, if I take from among the set of companies that may have raised a series, call it a Series A, $5-10 million, and done something interesting, and are now going to go and really launch onto the scene, right? Like a Rippling, you mentioned that earlier, and I think they raised $145 million. You had Lattice raise another $45 million in the middle of the pandemic. You've got a lot of companies that are doing that. What are investors seeing in those companies where they're truly willing to double down and throw large sums of money into them? And I'll say that they bring a disruptive tech. It's a pretty simple formula. You take the old line world of services and core HR functionality and a lot of these point solutions that just the first generation point solutions, I would call them, that just have not borne fruit, and that ROI is difficult to understand. And that's whether, and I'd say engagement's an area that I would really be looking at, and there's a lot of companies that should be concerned in that area. But then you've got some of these next generation solutions that have really cracked the code on that, and how to engage an employee base in a remote work fashion and drive value, for the whole company I mean, some of the best in the world there on the productivity side would be like a Slack, for example. You've got some new companies out there like Staffbase and the big investment they took in. They're out of Germany from Inside Venture Partners. You know, there's a whole world of these disruptive next generation solutions that are you know, people are able to prove an ROI and solve a real problem. A CHRO, you know, has fundamental issues, whether it's around, as Dev pointed out, diversity and inclusion, or you know, the need to engage a workforce, or quite frankly, the need to redeploy a workforce, which is driving the you know, increased adoption of talent marketplaces now, which is a you know, new area that Josh Bersin was writing about recently. You know, and there's getting a lot of heat and attraction from companies like Eightfold and others. You see, you know, just an intense interest in these sort of, you know, next generation solutions, and many of them are now at scale. They're moving up market into the enterprise, and so there's going to be a time of transformation. Is it exactly 2021? Yes, also 2022, 2023. We're seeing a whole new set of companies that are going to be rivaling some of the larger players in the market. You know, just having a large core HRIS and tacking on a bunch of solutions to check all the boxes, sell that all into the enterprise, like, you know, companies like Workday and Ultimate Software and the old Success Factors, my alma mater where I used to work, you know, that have been sort of guilty of that. That's not going to be sustainable in the new world. You're going to have to provide, you know, true ROI, or it'll be too easy to turn off parts of that solution and attach in a Rippling or a Lattice or one of these other players that are being truly disruptive. So.
Thanks, Mike. Dave, Brian, any other thoughts around what the investors would look at? Of course, we know about standard profitability, especially when you're on mature side, but anything else that the investors should typically would look for in an HR tech company?
Certainly growth over profit in almost all of HR tech, in my view. Ability to show long-term profit, but growth over profit up front, Vivek. I do think it's an interesting point that Mike makes to double down on, though, which is that looking for disruption, I think is important, but looking for a disruption that is sustainable and not going to become a skew within Workday is intriguing, right? If you don't have something truly unique and differentiated, or you're not in sort of a service plus tech area where your professional services matter, people are looking defensively as well on, well, with 12 million of offshore development, can Workday do this tomorrow, right? So you need to look sort of offensive and defensive at that set.
So last word, gentlemen, we're at the last minute. Anything disruptive, that any names that come to your mind? I'm sure our audience would love to go to their websites if anything that you've all been involved in. Dave, any names? Well,
we were talking about engagement, we were talking about recruiting. I think Eightfold is a big one, right? Mike mentioned earlier, they raised a record. I think it's now the latest unicorn in the HR tech space. So somebody that everybody's going to be following, and then all the remnants after Eightfold will be following and tracking them as well. But that's a company that probably is the next one on the unicorn list. It is already on the unicorn list.
Right?
Yeah. The unicorn horn is growing on that one for sure. I'm intrigued by a few of the, let's call it, were disruptive yesterday and then maybe became slightly less interesting, frankly. And now we're back to more interesting. So think about some of the HR versions of Zoom. So things like a hire view or like a montage.
Yeah,
where,
yeah.
How are you able to now communicate disparately and hire someone in, Chennai or Brussels and communicate with them? But all that video technology now is shifting towards post-hire, right? So now how do I do my performance review with video? Because I'm here and you're there. And nobody likes a performance review on the phone.
Correct.
Yeah.
Correct. Mike?
I mentioned Lattice and a few others. One company that hits some of the trends we were talking about, going freelancer and recruiting and automation, would be WorkGenius. Very interesting company, a little on the smaller side, I think, from this group, but some of the others that were mentioned here, but they would be very interesting. Another one on the sort of this great rehiring that's occurring would be Yellow. It's an interesting company that's growing inside. Yeah, Yellow.
Okay, I never heard that one, so that's one which I'm going to look for today.
Yeah, YELLO. Yeah, great founder there, Jason Wheatgarden. They've done well. I think they've raised 20 or 30 million, but we'll see where they go from here. I have high hopes. On the disruptive side, it's a very small company, but with an amazing founding team, which we never mentioned that. You have to have a great team at the start of all of this, at the center of all this.
I was waiting for that, but
yeah, but now it's popping in my mind as we think about companies. So Jobiac is another company with a great, absolutely great team, and people would throw money at them to do things. So
thank you, gentlemen. I am sorry, but my time check people are pinging me away. So thank you so much for sharing your ideas today. We will move this to the speaker lounge in case there is anybody attending who has any questions. There were a lot of questions that came through on the chat, but unfortunately, this was too short a time. So maybe another time. Thank you again, Mike, Brian, Dave, for your time today.
Take care, gentlemen.
Thank you so much, Dave. Thank you. Thanks, guys.
Bye-bye.
Bye, everyone.
Bye.